Disappointing revenue and those higher spending fears revive over whether or not these AI investments are justified. Our Seema Mody's been watching that. Shares are off of the session lows at least, but she has more in today's Tech Check. Hey, Seema.
It's clear that the market is growing impatient with Oracle's inability to articulate the precise amount of debt it will need to take on to fund its data center expansion. On the call last night, Oracle executives did say its debt would be substantially less than the $100 billion estimate analysts have been ballparking, and its commitment to holding on to investment grade. So that is reassuring. Chairman Larry Ellison and executives also talked about creative ways to bring down the cost of GPUs, which is the #1 expense for Oracle. They're looking to diversify their chip suppliers, not depend as much on NVIDIA, and in some cases rent chips and ask customers to bring GPUs to Oracle's data centers. So all interesting ideas, but management stopped short of providing the gross margin structure of these sort of deals and chip financing. That's raising more concerns on the credit side. Take a look at Oracle's 5-year credit default swaps. This has been seen as sort of a popular way to hedge the risk tied to the AI trade. Surging today, the highs not seen since 2009. I did speak to one credit investor this morning who said, look out for any signs of vendor financing, this whole idea of using GPUs as collateral, but that raises the risk of chips losing value over time. The shelf life of chips, that's the whole discussion there. The other big topic is Oracle's $300 billion deal with OpenAI. Last night, management did not provide any reassurances. In the last hour, just a couple of minutes ago, David Faber posing a question to OpenAI CEO Sam Altman about its deal with Oracle. Altman did say, we are confident we can continue to drive revenue growth to meet compute ramp, but not mentioning Oracle specifically, but saying that they can sort of meet that commitment. We're watching Oracle shares, guys, off the lows, still down about 13%.
Yeah, I mean, you alluded to this, Seema. So I guess the market wanted more clarity on the alternative financing deals that they could do and wasn't reassured enough by the fact that they're committed to staying investment grade?
Exactly, Sarah. I think they wanted a more definitive answer from Oracle's management and Chairman Larry Ellison about how they're looking to fund their data center expansion. There were many different ideas that were posed ahead of earnings around vendor financing, SPVs, looking at equity, a foreign investor like a sovereign wealth fund. These were all the different ideas that analysts were discussing. We didn't get that level of clarity from management. They just said, yes, debt is an opportunity. We'll look at the private and public debt market. We'll look at these sort of chip financing deals that could help us bring down the cost of GPUs. But again, they stopped short of providing the actual numbers around chip financing, which I think is still an open-ended question.
Yeah, I mean, I think it just illustrates how the nature of the AI trade has changed, because it used to be just the explosive revenue growth and backlogs were enough for the stock, but not so much today. Thank you, Seema.